Now we're recording. Hello, everybody. Welcome to the Coach's Playbook. I'm live from just outside of Chicago in DuBois, Wyoming. When I put this hat on, I didn't really think about the cans. So I'm going to take that off now. I've made my point. Anyway, today we're talking metals. All the glitters is not gold because silver's having a bit of a renaissance now too. We kind of want to go through a few technicals and talk about the macro ideas too that are influencing the current run-up in metals. JD, the metal man, why don't you kick us off? But actually first, let's get a trader shout out. Sorry, I'm on vacation and I forget to do that.
It's a
Mick,
long
you got a
commute.
shout out for us?
No problem. I do have a shout out. Big shout out to Raymond Hancock. Put up about $1,500 today trading the NASDAQ and the micro NASDAQ.
Very nice.
Mm-hmm.
Nothing to slouch at.
No.
JD, now do you want to hit us with some gold knowledge?
Sure. Yeah, we're all watching it. It was on quite a bit of a roll recently. I was just reading a Market Watch article that said the last 5-day winning streak snapped last Friday because of China imposing sanctions on U.S. citizens and retaliation for, perceived handling of COVID and some consulate closures. Is that part of it? Yeah, sure it is. There's still a lot of other moving parts to what's going on today. I'm sure we're all watching it kind of tank. A lot of eyes were on that 2080 level, sort of an area of resistance. After running stops up to 2090, we started to see open interest start to taper off a bit. From a day trading perspective, combine that with treasury yields kind of rising a little bit this morning, the dollar's firming up, more rumors of a vaccine coming out of Europe. President Trump's executive orders over the weekend, which are going to speed up the legislative process for passing a relief bill, and the S&P 500 poised to close higher for the 10th consecutive day, which hasn't happened in over a year, I want to say. There's just too much good news out there, and something had to give. Gold bit the bullet.
Yeah, I think this certainly paints a confusing macro picture. As I was shocked to see gold go off over 4% today and not have the stocks go with it, because the way I see it with the Powell put in the market, where they think that they're just going to pump more money in no matter what, I don't see how that doesn't keep gold firm. So I was kind of surprised to see it like that, especially with the dollar, you said, firming up a little bit. That's another thing that I thought would kind of torch the stocks.
Right, it just didn't play out. I'm sure a lot of people were expecting that. We saw stocks take a hit earlier this morning, but they never went negative. And now they're back on the rise.
Yeah, the dip buying squad was out in full force.
100%.
So, yeah, Mick, do you have anything to add as far as gold, or we can talk about the redheaded stepchild of gold, which would be silver?
Silver. I don't have a whole heck of a lot to say. I've got my monthly charts of gold and silver up here. It's been fun to watch them. I haven't been participating in the upside move or this downside move today. Gold obviously making new all-time highs. Well, not today, but it has been recently. We had taken out the previous highs from about August of 2011, September 2011, and silver well off its all-time highs from back in 2011 as well. Both those metals had nice bull markets going into that year. But that is, a ways off its all-time highs, kind of pushed up into an old congestion area where it's found a little bit of a resistance. I don't know. It's been fun to watch. It's been, those markets are tough to trade. I've always struggled with gold. I've never really traded silver too much. But these are large swings. Gold being down $89, $90 an ounce is quite significant.
So, Mick, for the retail traders out there, what do you think specifically makes gold a difficult product to trade in your experience?
Just over the years, I never really made any money trading it.
That's a pretty good baseline.
that's a hindsight insight, I guess. Today's a good example. Big ranges, it moves quickly. I think that it's really tough if you're a day trader to trade that. I think you can position trade around it, but just the way it moves, not every trader out there can trade every market under the sun or on the exchange, and gold's just one that I've decided over time just to stay away from, and it's something I watch. I I'm always conscious of what it's doing on a daily basis. I don't watch it too closely, but I definitely want to know what it's doing, as there's, it's the fight or flight to safety product. Excuse me. Tripping on my words there. So,
It happens.
it's a big product that people watch. I've chosen not to really participate in that market, and that's been the case for a while now.
Well, I think it's become very exciting lately as the people who kind of have a negative view of what's going on but don't want to fight the Fed at the same time. You can
Hmm.
kind of have the best of both worlds. You won't necessarily be right, but going long gold is, given the dynamics, maybe a safer way to play what would be short S&Ps or something like that. And I think there's a renewed interest here just because, the ratio between gold and silver has been so all over the place for a long time that it's been interesting to see silver catch up a little bit, but then be flying all over the place. Hogue, did you ever dip your toe into the gold markets?
I have dipped my toe into the gold markets, and I have dipped it into molten gold, which was not all that fun, but I did end up with a couple of rings around my toes. And by the way, it says here that I'm Daniel Hodgman. No, it's John Hoagland. I don't know how that happened, but I've got Danny's name on there, and
So this
hopefully
isn't a Freaky Friday situation?
I guess, yes,
Okay,
right,
perfect. Just
right.
checking.
And all of a sudden, I'm younger and better looking. But gold is something it was never on my radar when I was on the trading floor. Something that came to me as learning to trade on screen. It's much easier. I didn't have to fly to New York or send orders over there to trade gold anymore. I could trade it right on my platform. So it has been on my radar, and to me, I find it a very interesting, albeit challenging market to trade. Of course, every market is, but if there's one thing that confuses me about it a little bit is it's got a lot more volume in the London session. Okay, most of the products that we trade here are basically, the vast majority of the volume is going to be in the regular trading hour session, which I like. I can see all the participants that are currently in the marketplace. Can't necessarily see that as well in gold because the volume is more spread out over, even into the Asian session. Sometimes you see some pretty decent volume. Well, the one thing I do like about it is it's just thick enough to really give some decent volume and open interest in information. Most recently, I think coming off our highs, it was kind of it was kind of foretold in the open interest. So, I'm looking at it right here. I know not everybody is, but of the last 8 trading sessions on the highs and coming up to the highs, we were losing open interest. Open interest is, of course, the total number of open contracts in any particular futures contract or options contract. But just the fact that the price was moving higher on lowering open interest was enough to tell me that the auction process to the upside was probably tiring and that we were going to be looking for a pullback. So, on top of all of the things that JD already said, that was the camel I think that broke the. It was the straw that broke the camel's back, if you will. For me, is just seeing that open interest starting to fall off on those highs. I had a really big feeling Friday we were going to see some profit taking and maybe a little bit worse than that, and we're seeing that today.
Yeah, I mean, that's an important thing to keep an eye on no matter what product you're trading. But
Mm-hmm.
I think it's especially important in gold. And I don't have a ton. I got burnt once under the same coming out of the Great Recession when a lot of gold bugs out there were saying the same thing. We've printed, how quaint it sounds, $800 billion in the bailout, and there's going to be runaway inflation. And I took a nice fat loss on that.
Mm-hmm.
And so I've kind of stayed away from it since then. But I think the open interest is important too because, at least with the futures, it's you're bidding on something that's the delivery of physical gold, which there oftentimes, is a premium for those sorts of products. That's why people like the physical gold versus something like the ETFs, like the GLD or something like that. The hardcore gold people would call that just paper gold, and I won't go into all of that. But I think it just makes the open interest something that's very important to look at. So, going forward, We had the 4% pullback at least today. I haven't looked in the last 20 minutes. We've been fiddling around with Zoom here. What do you see as the next catalyst in gold going forward? Is it going to be important to look at the size of this stimulus or what the Fed's doing next? Or are you just looking at straight sort of market technicals? I'll throw that over
Personally,
the
go ahead,
Hogue.
JD. Okay. All right. Personally, I'm looking more at the market technicals. With the break below, what I call the weekly kickoff of 2006, it's starting to look like we may be starting to form a little bit of a head and shoulders. If we can keep price below that 2006 level, I think that a head and shoulders is certainly part of it. Of course, we'll be watching volume, watching open interest, and as they keep pouring money into the economy, that's all going to take an effect on it. So, but I'll be watching the technicals, the volume, the open interest, the auction theory about the market. That's just me personally.
Sounds good. JD, you have any closing thoughts to add?
Yeah, sure. I read all kinds of newsletters and articles from market pundits and analysts. 2100 is still on everybody's radar right now. They're still talking about it this morning. But a close below 1950 could open the floodgates, start a slippery slope kind of reaction. So I'll be looking to see what happens on the close today. Today's Tuesday, August 11th.
Yeah.
Perfect. Well, hopefully we'll have this out by tomorrow. That's some good actionable evidence. I think maybe I'll go down to the creek and try and pan for some gold myself. See what
There you
I can do
go.
there. In the meantime, Hogue, you got a quote to close this out?
Sure. One of the things about trading is it's always about change. It's about price change. It's about recognizing change in the market state. Got a little quote here. I have no idea who it's from. Just hits me as important to day traders. And the quote is, the most dangerous phrase in the language is, we've always done it that way. And that's the quote. And if you're, consistently trying to do things the same way and the outcome isn't good, well, that's the definition of insanity. So try something new.
Certainly. That is the Lehman Brothers epitaph.
Yeah.
Anyway, I think that's probably a good place to sign off today. Since Dan normally reads the quote, Hogue, why don't you give us your classic sign off?
All right. Well, it's a good trading day. Lots of opportunities. Get out there and profit. Trade well.
We'll see you next week, everyone. Stay safe.